Right, so welcome everyone to the India market review for the week ending Friday, 11th March actually, 10th March, sorry. We are on Sunday, I'm in a little bit of a time bomb. And as we all know, the biggest news that is there around us is BJP's / Modi's big win in UP, Uttar Pradesh state elections in India. Where they have lost, in a sense, along with the coalition partner Punjab, a fight going on for Goa and Manipur also, I think. Right? So much of the, what shall we say, iffiness, if anything, that was there in the last few days has been set to rest for sure by now. There is clarity for the next 2 years. I'm not aware of any major elections coming up. I think Karnataka is coming up. I'm not sure when. This year, next year? This year, I think. Yeah. We'll already talk about the BJP win in Karnataka now. Most importantly, might change the arithmetic in the Rajya Sabha going forward, and the current government could push through perhaps a lot more bills and / reforms in the days, weeks, and months ahead, or at least that is the general expectation in the market, as you might already be aware of. The other thing is the GST. So GST is set to be rolled out by July. I don't know beginning or end. So that's here now. So there is a lot more clarity on that. Of course, the opposition within the Lok Sabha would have lost a bit of its ability to stall stuff just because of the results. The Samajwadi, Congress, Akhilesh, Rahul venture has really not gone any other way except down for both of them. Of course, they're trying to put up a great face about it. Hey Girish, hi, thanks. So 2018 elections, Karnataka, Himachal Pradesh, Meghalaya, and Mizoram. Right. So Karnataka, yes. Himachal, all right. Not a politically heavyweight state, and definitely not Meghalaya and Mizoram. So Karnataka is the big one, and if you go by the looks of it, looks like well, BJP will come to power here. I'm not sure about how many folks are too happy about the current state of affairs here in Karnataka. Anyhow, so the Nifty or the Sensex for that matter has been, as we all know, it's been very iffy for the last many days and many sessions. You can see that on the chart. You should be able to see the Nifty chart. If you are not seeing that, please let me know. So basically, wait and watch, consolidating that's been going on for a week, 10 days, a double top of sorts, and very close to the life high. Given the results, I would think that most people are expecting it to gap open. Of course, tomorrow is a trading holiday on account of Holi. I'm sure the grey market is already active or has been active ever since the results came out. I'm not sure if there's any information available on where the Nifty is trading in the grey market right now. So we'll just have to wait till Tuesday morning India time for us to know where the Nifty opens. There is also, so there will be one full trading day not there, and it'll be interesting to see what happens. I'm not sure we've had, I can't, at least if there have been, I'm not aware of any previous event like this where the important set of elections got over and then we had this sort of extended holiday. So any other weekend was there. So in a sense, it shouldn't really matter one day here or there, but well, traders have an itchy finger, so there will be a lot of eagerness to figure out where the markets are. Having said that, Monday morning, tomorrow morning, you could definitely look at SGX Nifty, Singapore Nifty, and I'm sure that will give us some indication for where things could be on Tuesday morning. Having said all that, looking at some past data that I was just reviewing on and off over the day today, there's a good chance that we're going to gap up. So from this important almost 9,000 odd triple top, in a sense, we gap up and we probably get a new life high on Tuesday. Now, of course, the absolute life high is here on a opening closing basis, or rather opening high basis was on 4th March 2015. So the market opened at 9,109, a high of 9,119, and then really couldn't sustain when we went back down. So we are what, 100 and from the highest ever, about what, 170 high and 80 points away from that. That's about less than 2%, or about 2% away from there, and that's something that is definitely in the very real realm of possibility on Tuesday morning. Having said that, the other big event around the corner is the Fed rate anticipation. I was speaking to a forex dealer from Kotak Treasury yesterday, and she was telling me that there's a 93% chance that has been factored into a Fed rate hike, and that's what the bond yields in the US are basically saying. I'm sure you can find this information somewhere on the net also. So the moot question is, with a Fed rate hike almost guaranteed, the big shock will be if the Fed rate does not, the Fed does not increase the rate. And increasing Fed simply means that US has become even more attractive. It already had become attractive over the last many months. Now, whether this affects sentiment even further, and there's an outflow of money from emerging markets, including India, which has been happening for the last couple of or a few months, and whether this UP election can reverse that fund flow issue is something that only time will tell. But essentially, what is interesting is we've got these sort of two opposite events happening. On a very positive political event in India versus a potentially negative event out of the Fed that could affect India in sentiment-wise negatively. So that's the two things. And Tuesday morning could be, or next week rather, it's quite possible that we could therefore get a sort of bounce up on Tuesday, maybe lasting into Wednesday. I'm not sure. If we can get a Fed rate date, that would be great. And the euphoria may not last. We've already had sort of 2.5, 3 days for the markets to sort of settle down, or not settle down, but for everybody to start getting used to the idea of 2019 also, forget 2017, for that matter. And an initial euphoria early part of the week, and then maybe cools off simply on the account of the Fed increase. So let's see. Interesting times ahead, as usual, I guess. What levels could we look at? I think that's really a tough question to really answer right now, and since we will be breaking all-time resistances that are there, and where do we go from here? So at the very least, of course, 9,000 I think is a given. I would just, to keep it simple, go with the round off numbers, 9,100. I don't think 9,050 will be a issue at all. 9,100 is probably the next logical level, and then it could all go up another 50, 100, 200 points there before it cools off. One of my favorite themes has always been that at some point or the other, after this 9,000 resistance, 9,100 resistance is broken, and the market continues to rise for some time. This resistance, which is in a sense a double slash triple top over 2.5, 3 years, is going to come back to get tested as a support. So this is something just to keep in mind over the longer term. I doubt whether this is applicable necessarily for next week, but after runoff, it will come back to test 9,000 or even lower levels, and then you're probably going to see a more sustainable longer term rise. So that's because I mean, what I just said is for more longer term traders slash investors. So if you feel left out on Tuesday morning with a massive gap up, well, yes, fine, no issues with that. Just be patient, and the market should come back to test 9,000 odd levels at some time. When is difficult to really say. It just reminds me, I don't know if any of you happen to watch. If you did not, please do. Interview of Howard Marks. Howard Marks is the co-founder of Oakwood Capital. They are one of the leading, very respected and acknowledged bond or fund managers in the US, managing over $100 billion. And there was this interview with him last week with Lata Venkatesh, and I happened to watch it. I'm sure you can find it on YouTube. And she asked a question about levels, and you should really, appreciate his candor, his politeness, his demeanor, and the depth of his answers. And she was asking about levels, and she said, you know what? A colleague of his apparently told him that, look, if somebody asks you about levels and stuff like that, if you're going to give a number, don't give a date. And if you're going to give a date, don't give a number, right? He said it in a very, serene, deep way, and it's when you think about it, there's so much depth to that. So are we likely to go to 9,500? Sure, of course. By when? Ask God, I suppose. So we probably do 9.1, I think, at least maybe even 9.2, and then we'll come back. When will we do that? That's a tougher question. Just that to have these levels in mind, and when they come, put alerts before that, I suppose, or to keep watching the chart and to act accordingly as and when those levels are reached. Okay, so that was a sort of quick review of the Nifty. I'm not going to do a detailed one today, as we all know. Keep looking at the Nifty chart. So let's look at the other thing that is also expected about the win is that the rupee is likely to appreciate for some time. So we've had the rupee go from almost 69 to now 66.50 or something like that, and the rupee could strengthen even further. Right. So while we took that brief break, I was looking at the chat messages, and there was a message by Girish talking about cup and handle pattern. Sure, I guess referring to this, I've made this weekly chart. Correct me if I'm wrong, and Girish, I'm assuming you're referring to this. I've always had an issue with that pattern in terms of just putting that out front in terms of a disclaimer, which is I know it's been mentioned in websites and various places, but I've never found it mentioned in some of the earliest texts of Doge theory. So sort of just my pinch of salt on that. And also if there is, it's like more like a consolidation pattern in terms of measuring implications. If there is anything, I'm not too sure about that. So point noted, but I'm not taking a view on that. There is definitely, I think, one thing to probably keep in mind, which will probably be useful for sure at some point in the future, is this trend line. Very, very long term, not a very, very long term, but definitely an important, I think, multi-year trend line that I know it doesn't sit, these points don't sit, but this as a best fit line, this is something to watch out for in the years, months and years ahead. Okay. So given that, would like to jump into our traditional format and look at what the global markets are doing, and then come back to the Indian markets and do the sector review in this part of the IMR. So what you should be seeing now is the chart of the Dow Jones, and as you can see, the Dow Jones has hit 21,160 sometime a week and a half back, and then it's been obviously correcting. And anyone who knows even basic candlesticks or dot theory can definitely say that this correction over the last 1.5 weeks has been a pretty mild one. We've got some excellent, very strong green candles, and then we've got this doji spinning tops type ones over the last 1.5 weeks, and come back to test 20,800, and then bouncing back. This could be so in the longer term, the Dow Jones is most likely on an uptrend. I'm not going to do a detailed Dow Jones analysis here, and it's in this time frame, it is possible to go back to at least 2100, maybe even 21,150, and then we'll have to review. Just to add a point of note and point of interest for those of us who know Elliott wave, this could be part of Elliott wave corrective wave that you're seeing here, and it is definitely a corrective wave. There's no doubt about that. But this is not, the corrective wave is not complete and it's not yet over. It is possible. The other scenario is, so the two scenarios for the Dow Jones. One, it goes back to about 21,600 to even 22,000, and then perhaps comes back down. Given that the Fed is around the corner, it will probably stay, sit here, wait and watch, and see what the Fed announcements are, and then do a move after that. If the Fed, I think, talks about even more strengthening and even more tightening of monetary policy in this year itself, it's quite possible that money will move out and away from the equity market and into the bond market. That would lead to some sort of at least a mild correction, a further correction in the US market, which I'm sure is going to affect the rest of the world also. So that's an important thing to keep a note of, and this is to connect it back to our earlier part of the discussion, that we could have an up move on Tuesday, and then we see some sort of a correction later in the week when the Fed does its thing, and maybe the Dow Jones goes down further. So as of now, so it's still a corrective thing, right? The trend is still up on the US Dow Jones at least. Look at the S&P 500, we probably see a similar pattern. Yep, that's the S&P 500 after hitting a life high of 2,400. Almost a copycat pattern of Dow Jones, so there's really nothing to say more. So both the broad market and the narrow market in the US are doing that. And coming to Europe, interesting. I was expecting to see some sort of a correction which was similar to what we saw in Dow Jones in Europe, but clearly that's not the case. It's more like a consolidation that is going on, and looks like that is actually steps to reach its life high and go back to the 2015 levels. Now, this is quite honestly, when you look at all the factors which are going on, so there's elections in France, and Le Pen, who seems to have garnered quite a bit of strength, clearly stated that if she got elected, she would want France to leave the European Union, etc. So that will be another, sort of Brexit after Brexit, and we'll have to see what happens there. But in spite of those concerns and worries, at least the DAX does not seem to be, in my opinion, worried at all. It's quite it is definitely consolidating. It's not even correcting. It's sideways time consolidation, and looks like it's heading back to its life high level. So that's as far as DAX is concerned. Let's look at Nifty. So wow, the Nifty made a further life high. I haven't seen Nifty, so as you know, we didn't do IMRs for about 2 weeks. Various things were going on. So yes, 50 has made a new life high, and it's where it's gone, and seems like a reaction. Sorry, a small reversal, a correction, and then 50 could perhaps go back up. Now again, in UK, there are these issues with the Brexit, the voting that's going on about whether the UK Parliament should have the say on the final exit treaty. There are growing calls for the Scottish second referendum or third, I don't know which one it is, and this one they might want to leave the UK. And there's a lot of politicking going on there on the Brexit issue, and Prime Minister May is definitely not having a easiest of runs, and I'm sure it's turning out to be, looks like it's turning out to be more difficult than she anticipated. So you've got that going on, but she's committed to 30th March as being the 31st or end of March for invoking the, the commencement of the exit. So we'll see how that goes. So that's another sort of event which is going on there. And it's interesting that the pound actually depreciated last week on the news that of the parliamentary vote, UK parliamentary vote about the Brexit thing. So going for a UK holiday is actually becoming cheaper and cheaper. So that's something that we should keep in mind. All right. So this is so Europe, that's up. Let's look at CAC, France, Paris. Whoa, I'm surprised. So CAC France looking more like the DAX. Looks like it's not too worried about the elections there right now, the French exchange. But what's important to note is it has broken out to this resistance zone of 4,900, 4,950, which has been there from 2015, and it's clearly in that sort of beyond the resistance territory. Mood question whether it can keep rising to 5,100, 5,200, or cool off. That I think definitely tough to answer. And this is still one of those exchanges which has just not come back to its 2008 high of 6,130. We're still at around 5,000 odd. So one big huge laggard amongst the major European economies. So that's almost doing that. At 2015 went to a life high. FTSE went up mostly on account of the depreciation of the pound, but France has really lagged behind. So, but also and then technically France looking like it's going up, unless of course where is that? So this trend line gets broken, then I would definitely worry. Till then, I think it's good. We've got a shooting star there. We just have to wait and watch and see how it pans out. Right. Okay. So at best, I would say Europe is mixed signals. So nothing to really particularly affect India, and the US is could be bullish a bit, but given the Fed and given the Elliott wave incomplete pattern, looks a little bit on the bearish side according to me. Looking at the Nikkei, so on 10th, it has really jumped up, and I'm assuming some local factor there is what made it do that. So the Nikkei is looking like it's going to cross 19,600, 19,650. Very strong bullish candle. Something wrong with our volume chart on this. My apologies for the price chart. At least here are more or less correct. So I think connecting all this back to our local factors, that the sort of it's pulling both ways. I was trying to find one word. It's pulling both ways: the global factors and the market and the chart and the Fed and the DAX, and pulling both ways. One is, like, I would say 50-50, bullish versus bearish. So I think it just, in a sense, at least I would see, the way I'm interpreting that is that the Indian elections will definitely be center stage for some time, along with the GST impact. But at some point, once that euphoria sort of comes down, the European and the American effects will come into play, and those, my view right now, are more biased on the negative side or on the downside rather than on the upside. Right. So that's the view. So coming back to Nifty, yes, still expecting it to go up. The in the There's nothing in the indicators to help us decide. Everybody knew about the elections, and they can watch. You can also see very clearly the volumes went down the whole of last week, very much in line with a consolidation approach to the market. What is one thing to sort of, well, let's see, this time to I'm just trying to figure out if there's anything in the indicators to help us get a better idea. I don't think so. There really isn't. And event here is of such a nature that even if there was, you couldn't pay too much weightage. You couldn't give too much weightage to the indicators at this point. All right. So 9,000 for sure, 9,050, 9,100, possibly higher, and then a correction back to maybe 9,000. And if you look at some lower levels later, then 8,000, 600, 8,700, and even 8,200 are possibilities down the road. Also, to keep in mind that fundamentally, in terms of PE ratios, price to book value ratios, and price to sales ratios, we are definitely on the higher side in India. There is some headroom for it to still become more expensive, but not below the top. So that's another limitation. And another thing to keep in mind, just a few weeks down, the annual results, and whether they will show further EPS growth or not, and whether demonetization obviously seems to be a non-issue as far as the elections are concerned, and the last quarterly results, sort of a mixed bag, and whether the recovery is actually happening. We'll know that in a few weeks, and that should give us a better visibility going. So by the time June, July, GST, and so here's the thought going through my mind. Over the next many months, we will probably very, very likely see a correction of some sort. We've got a sort of run up from 7,900 to 9,000 one way. There is really no meaningful correction that we have seen over this year, or about 4 or 5 months, and it's a one-way upstream. That's almost 1,100,000, including Tuesdays, coming weeks, 1,300, 1,500 points easily, on without any significant or meaningful proportionate, no, not significant or meaningful, I take that back, without any proportionate correction to correct a 1,100 point move. That's my view. So it's just the nature of the market. You will get a correction of a few hundred points on the Nifty for sure, and that's probably happening, I would say, in the next 3 to 5, 4, 5, 6 months, is my view. Could happen sooner, depending on various events. It could be that the Fed increase triggers off that bigger, more proportionate correction, and when that happens, 8400, 8500 are, I think, quite distinct possibilities of the Nifty. Right. Okay. So with that, let's jump into our sector review. Right. We're looking at the sector indices, and of course our first pick, as usual, Bank Nifty. Okay. So the Bank Nifty created a new life high, right, with the move last week. Very surprising one. There was this big down move also, so you had this massive up move. So this was the old life high, the green line. This is the new life high in terms of a high, or even in terms of closing prices. You had it there, and I had put this point there. I don't know if I discussed in the IMR. I don't think we did one. Whether we are actually looking at an exhaustion gap here, right? So the market went up, came back down. This gap is still not closed. So to close, the market needs to come down to 20,000. The Bank Nifty needs to come down to 20,300, which is a clear 450 points lower than where it is right now. Now, one thing to keep as far as the Bank Nifty is concerned is very likely the interest rate reducing cycle is over in India. There is very likely to be no more further decreases in the interest rate in India, and because of that, I don't think one should expect, so generally when interest rates decrease, banks tend to do better. That's not likely going to happen. So we are not going to get that effect on the Bank Nifty. We'll just probably see this perhaps getting affected more by the Fed, and the Bank Nifty could perhaps actually go down rather than go up. So it will probably go up on Tuesday, maybe Wednesday, give the overall sentiment in the market and positive outlook on the economy. But as the Fed increases the interest rate, it becomes more and more important for the emerging markets to not drop interest rates at the very minimum, and maybe even increase the interest rate to keep the dollars coming in. So it'll be interesting to see what RBI does in their next policy. So the bullish move that could have happened from an interest rate reduction, that factor is now that force, or that is now not available as far as the Bank Nifty is concerned. So that's so 21,000 on the Bank Nifty looks like the resistance right now, and then there's a gap to be closed. Could come back to 20,000 also. Again, really no proportionate correction from 17,600 all the way to 21,000 has not happened on the Bank Nifty as of now. So that's another thing to keep in mind. So the levels are 21,000, like I said, for traders. Anything above that is the blue sky area. We go in, hundreds and 50s, and then maybe 22,000, 21,500, and then the story keeps going on. All right. So that's the Bank Nifty view. Then coming to, so while we have that, look at the CNX PSU banks, and just the PSU banks, and you can very clearly see that a very different picture compared to the Bank Nifty with both PSU and private sector banks. They have done a tweezer stop, a significant tweezer stop here at 3,500 odd. Right, okay, exact price is 3,504, and it's corrected after that. They have definitely come to an important support zone. Support / resistance zone is where they are. Let me just take this and expand that to the right. Okay, right. Okay. So that's that band. It will be interesting to see whether they can break out of this or not. If I think it's a pretty tricky thing to trade this one. There is both evidence that one can argue for the bullish view and for the bearish view. I think I personally would stay away from PSU banks right now. It's tough to say whether they're going to go up or down. I don't have the private bank index here, but obviously if the bank Nifty is doing what it is, which is what we just saw a little earlier, then this bullishness that you're seeing on the bank Nifty is definitely on account of the private sector banks and not on the uh, public sector banks. Okay. So coming to our other indices, let's look at IT first, the CNX IT. So H1B issue not resolved for the IT guys. Let's look at this. This is interesting. Let me just extend it right. There you go. And as you can see, it's come to that trend line, which I have not moved. And we are just putting that. And a rupee appreciating is definitely not good for the IT guys. So you've got a sort of double whammy for the IT space. On the one hand, you've got the business challenge with H1B and protectionism, all that in the US, and the call for jobs coming back, and the rupee getting stronger over the last few weeks, and probably likely to get stronger in the face of the UP election news. So is that a limit that we're looking at in terms of the NSIT going to about 10,900, 9,950 perhaps on top, and then is it going to be able to break out of this downtrend line which has been there for 2 years now, I think. Yeah, so Jan 2015, 16 to a little bit more than 2 years. So we're getting into the third year right now. On the other hand, is this downtrend over, and do we have a uptrend and a recovery of sorts that is going on? That's the sort of counter view that one can take, and we'll have to wait and watch on that. Right, so there we are. Just at that sort of juncture, it'll be interesting. This is a weekly chart. We'll have to see what happens. So that's again at one iffy place, and it will be tricky to trade the IT stocks, in my opinion. If it breaks below 10,700, 10,650, then 10,500, I think is a very, very easy possibility. On the other hand, breaking above 11,000 is definitely required for any further up moves to happen. Okay. So both banks and IT not giving us any particular direction, in my opinion. It's just one human nature to sort of look for validation to a view that one may already have unconsciously formed. So here's what could happen on CNX which would fit in with the Nifty view, which is it still goes up till about 10,900, 950, and then it turns back down. Why? Because it's hit a 2-year downtrend line and a resistance zone, and then it just corrects back to maybe around 10,500, and then we review that. So the initial euphoria on maybe Tuesday, Wednesday, and then a down move after that is what I'm wondering would happen, right? And the rupee appreciating is not a healthy factor for this at all. All right, and then the 200-day moving average at 10,500. So IT, even if it goes up, I would say limited upside, and then it turns back down to go back to 10.5. All right, let's look at pharma. Okay, so pharmaceuticals clearly on a downtrend. I would think they're still quite weak. We had a massive bullish engulfing here and even there, but just keeps getting hammered down. 10,500 I think is a multi-year zone. That's why I've marked it like that. Yeah, from 2014 onwards, if we come to that, it's at a resistance zone. And again, not sure this counts for too much in pharma, uh, like as much as in IT. The rupee appreciating is again not a good sign for pharma's earnings in rupees for the considerable exports that Indian pharma companies have. Okay, so looking at a weekly chart of TNX Pharma here. Wow, okay, so we had this sort of diamond-shaped parallelogram type of formation that happened over 2 years. Something similar happened in TNX IT also, and it's broken down. It's broken down, clearly not has not met the melting implication, and then it's turned back up, and it's on the weekly chart. Remember that. So quite possible that the breakdown of this neckline, support line, even if it goes up, could be tested as a resistance, and then perhaps we head back down. Important level to watch in pharma will be this low, which is at 10,000, 9,777. So pharma also looking iffy. Uh, so even one of what is called a defensive stock, that space is also not looking too good, technically speaking. Okay, let's look at autos. So autos, yeah, looking quite good actually. I mean, good as in, I won't say bullish, but definitely not bearish is my view. The GST, there's a lot of debate about what GST could do for car prices. Uh, there is multiple opinions on whether it will make it cheaper or more expensive, and also the question of in which GST rate will cars get slotted, or are they going to do something like small cars one GST rate and premium cars another GST rate? No idea about that. We'll have to wait and watch. So again, so this is the daily chart. Auto clear resistance at 22,000 on the BSC auto index, and it's important to see what happens after that. Auto sales have overall generally been good with an economy that is expected to recover, especially the heavy vehicle guys will perhaps do better. So that is an fundamental uptick that one can keep a view on. And there is an article in Deccan Herald. I don't know whether it's today's news or last week. So the interview with Volvo Truck CEO is talking about how GST could not transform, but make logistics a lot cheaper in India. So in that article, it's mentioned that on an average, heavy truck in India travels not more than 300-350 kilometers in a day. And a lot of the time is just spent at check posts and at entries and checks and all. With GST coming into play, all those will get abolished, and there will be freer movement, and then trucks could do up to 800 kilometers in a day. That's almost 2.5, 3 times perhaps of what they're doing right now. And what Volvo is doing is readying its range of long-range heavy-duty trucks that can do this better, or even better than their current range. Just, I think, useful, though Volvo is of course not listed. The reason I mentioned it is that's a sort of permanent long-term transformation that you're going to see because of GST, and logistics is one of those places which has been a favorite for punters there. And if that happens, then companies like Tata Motors, heavy, of course, Tata Motors and Ashok Leyland and all other ones to watch out for. On the passenger side, I think activity is quite normal. Demonetization seems again to have been a blip, seem to have sort of resumed at a good clip, and sales are decent. Some new launches I think are coming up. Not remembering which exactly, but some more both by Tata and I think almost all the companies on the passenger vehicle side they have something or the other coming up. So that's in my opinion looking okay. I don't know where the fundamentals are, but this is not looking bearish technically. And if there is a place one could look at maybe being bullish and buying, then auto is one place to look at. So individual auto stocks, we could maybe do that at some point later. Then coming to capital goods. All right, so let's look at capital goods. Capital goods clearly been consolidating. It's almost like a very nice either symmetrical or an ascending triangle. Let's see. So that will be the boundary of that. And this will pass the specific line. Right. So a lot of symmetrical triangle on the auto space, almost going on for about 3.5 weeks, right? Sorry, on the capital goods space, and not very far from an important resistance at around 15,800. And I think this is all set to break out of that. So that's okay. So I've gone back really far, and just need to drive your attention to this highest sort of light pink line. It breaks that at around 15,700. Then 1,000 points up on this is, I think, a very, very distinct possibility. Infrastructure, capital goods, I think will have a positive spin-off after this UP verdict. The expectation that reforms and economic issues will be addressed more proactively after this. Okay. All right. So that is BSE capital goods. Looking at FMCG space, let's look at metals and looking at metals. So metals have been correcting quite a bit, coming very strong, red candles. Looks like a lot of very strong selling has definitely been going on in the metal space. They had almost one-way straight move run from 6,500 to 11,000, and then with this correction, and then now this had done this rounding top a few weeks back. It did not break that. It did not. It did not break that. Definitely, that neckline did not break, and then it went back up, and then it's coming back to this neckline. Maybe it will come back to 11,300. Not sure about that. So we'll see. It will be important to watch this level at 11,500 tomorrow. Right, tomorrow, day after, it could bounce up and go back to 11,800 and then break down. And which brings me to the possibility of a potential head and shoulder top that we might be looking at. And on this left, we have the left shoulder, a head which has sort of completed. It goes back up Tuesday, Wednesday, Thursday, and then again comes back down. And this neckline that I put here is a potential neckline. That's support line I put there is a potential neckline of the head and shoulder top. And if that breaks, then we could probably see metal drop to 10,800, maybe lower. So that's a point to keep in mind, right? Capital goods bullish, metal bearish. That's little sort of incongruous, but well, at least that's not now. That's what the chart says, right? Okay, next reality. Oh well, the reality is also in a just sideward wait and watch mode. Really nothing. Reality, of course, mostly defined by what DLF does or does not do, and we'll have to just wait and watch on that. So I'm just trying to quickly scan my mind to see if any fundamental factors that could affect reality. I can't think of anything right now. I think it's coming to my mind. So again, I think reality looks like has perhaps a limited upside to 1500 or thereabout, and then it might come back down. So that's where we are. Okay. Watch for that level if reality goes up, mostly the BLF chart. If it goes down, then 1400, 1450, or even 1430 could be a distinct possibility. So again, not seeing anything really bullish in this space. Interesting. So we have this level to watch out for, and we are right. We are there actually. So that's a support level of many months that it is testing. If it breaks, then I think 1400 is a very distinct possibility. So another one which is, in my opinion, more bearish than bullish. We did not look at FMCG, so let's look at that. So you can see FMCG also wait and watch mode for the last 3 weeks, as a matter of fact. Pretty unusual. And suddenly, when thought crossed my mind that this is a data problem, I don't think it is. This sort of behavior in the FMCG chart. I had made a new life high double top, and then not able to break out of that. Now, one thought that does come to mind is I don't know, sort of flag type pattern into a weekly chart, but not sure what it could be. We'll see. So yeah. Well, again, if market jump up on Tuesday, then I think 9,000 right now looks like a resistance for FMCG. And then don't see why it would still maybe keep going up, though we are in a longer term uptrend. All right. So this is interesting. We're not finding anything where it's clearly very bullish. Power index here, all the power producers, and that's also been quite bearish in the last 2 weeks. Very strong red candles, and looks like it will probably go down maybe even to 2,100 on the power index. So yeah, have I missed out anything? Consumer durables. All right, so that's one place clearly showing some mild bullish strength. When I say some mild bullish strength with a lot of some, you can see that the candles are very weak. The green candles are the one that's been a very iffy up move. So still could go up a little bit, but looks like limited upside by the nature of this. A lot of strong bull bear fights going on at around 14,000 on the consumer durable index. So that brings us to the end of sector indices. It's quite okay. So what's the take home? The take home is that there is really not a single sector that I can see which is a very clear, strong, bullish sector. Everything that I can think of, if anything, the only one was sort of auto, and Other one was capital goods, sorry. Capital goods, yeah, was the other one. We're looking at a breakout of the symmetrical triangle. But everything else is either neutral to bearish, and that's what the reading of the chart is. So any up move in the coming few days is probably okay. Sorry, I think sometimes we are having some audio connection issues. Any up move on in the coming few days, in the coming week, the thought going to my mind is probably a opportunity to short rather than an opportunity to go long on. So the bullish opportunities are perhaps just for a few hours or days, and then looks like the bears are going to take over. Hopefully, next time around when we do the IMR, I'll have the FA update done so that we can include the FA view into that session. So for now, short-term bullish, but looks like more on the longer term. Shorter term meaning as in days or maybe a week or two tops. But beyond that, looks like more a bearish view is my take home from this IMR. Right. Is there any inputs or any questions on the sectors, not on individual stocks or on any global indices? I would be happy to take them now and put them in the chat box. Otherwise, we'll close this session and I'll update you about the part 2 for individual stocks. So does anyone have anything? So there's no telecom index, so those are individual stocks. So telcos will be done on a separate individual IT, sorry, stock specific IMR. All right. All right. So that's just for everybody's information. There's probably a telecom index that NSE and BSE maintain, but that's not free to the public, and it's on payment only. So that's definitely available. It's not that telecom index is not there. A free telecom index is not there, and that's what we are looking at here in all these indices. Last I checked, I think NSE had a list of some 70 or 75 sector or subsector indices which one could get data for, but on a paid basis. All right, so great. So just to wrap up, maybe 9100, 9050, 9100 is possible on Tuesday. Now I'm wondering whether even that is possible, given that Fed is around the corner and given this bearish view and given that there'll be 3 days to digest sort of gains which are have been made by the BJP, and maybe the market will not be that euphoric on Monday, on Tuesday. And then remember, by Tuesday morning, the US and the European markets would have done their bit for Monday, and they will be, that to be factored in. Yes, I think there is a Fed meeting this week, right? Let's confirm that, the date. Okay, so investing.com, you can see that we actually have 4 central bank meetings in the coming week: US, Japan, UK, and Switzerland, right? And then there's also a 2-day G20 meeting. So 11:30 p.m. India time on Wednesday night, right? So fine, we've got basically Tuesday and Wednesday morning or daytime in India for the Indian markets to jump up, and then Thursday, to be correct, I don't know, but widely expected to raise fund rate by a quarter percentage point. So that's factored into the projections of the prices which are there, obviously. There'll also be a press conference, and then there'll be this thing to figure out what they will indicate next, right? So interesting week ahead, definitely. Right? So like I said, Tuesday, Wednesday, we are bullish, or at least on Tuesday, and then maybe Thursday we start into a corrective mood. I don't know. So let's see what happens. So with that, so I mean, if you're a trader, happy trading. Be careful trading this week. It could be a very iffy thing. You'll have to perhaps act fast as sellers come in at higher levels, is what I'm expecting. So, I mean, I'm just thinking if I had to, take a positional view, I think it would be more bearish than bullish on the Nifty and the Bank Nifty. On individual stocks, the story could definitely be quite different. Right. So with that, we will come to the end of part one of this IMR. I'll just update you over WhatsApp in a couple of minutes about part two. So I hope that part one has been useful, and hopefully you'll have this uploaded on BIC's YouTube channel by today, and send out the link to all the subscribers. Okay. Right. Thank you, and have a great week.